Good morning. How's everybody doing this morning? So I'm starting out with the daily candle chart to show you guys a point or illustrate a point anyway. I think it's kind of really important to realize this. And this isn't the first time this has happened. So I want to make sure that you understand a certain concept. Oh, holiday in the Netherlands. Oh, cool. Something with religion. That's sorry, something with religion. That's funny, Moran. Okay. All right. Sorry. So we saw this after COVID. We saw this. I mean, you guys should have, anyone who's been trading over the last 5 years should know better than to be shorting all-time highs, right? I mean, day trading and hit and run shorts are okay, right? Shorting the backfill, shorting a little liquidation break, nothing wrong with that, okay? But shorting, you know, a market in a position short at all-time highs is probably one of the dumbest things that people have ever done. The reasoning for shorting all-time highs is that it's too high, it can't go any higher. That's not a valid business reason if you know anything about markets, okay? Um, I still remember when we had, I think it was JC Peretz on our podcast, and this was years ago. You know, he was saying we're going to get into this huge bull run, and everybody's telling us that it's over and it's short, and you're going to miss out on this huge opportunity. And he was so right. And we had him on again months ago, and I remember telling him, I go, remember when you told everybody to buy the market and they said it was a short? And it's because they have no clue how markets work, you know. Take a look at this chart. What in this chart, if you know anything about business, right? If you have any small inkling about business, right? What in this chart tells you to short it, right? Other than your ego that you missed along. Now, I understand that part, right? You didn't buy the market, you didn't go long, you didn't believe. Now you think the only way to make your money is to short it. That's not a valid business reason, right? The sellers have no reason to sell. And let me bring you this, my friends. Check this out. Is there any inventory up here? There's no inventory up here at all. We have been in a trending market since the middle of April, and this is the front end of the move, right? There is no reason to short this market. It doesn't make sense. How could there be any inventory up there? That's exactly what I'm trying to tell you. There isn't any. There's no way that there's inventory up there because we've never traded up there. In order to create inventory, you have to spend time and trade here. See, this is inventory, and it liquidated. That's an okay short, right? Because when this blows, it's gonna topple all these people who are long out. But you don't see that here, right? Does that make sense, Charles? There isn't any inventory. I'm just trying to prove a point, right? And it's a very simple point. but it's a point that people refuse to accept, and that's what keeps propelling. We do go up indefinitely until we run out of buying. Now, Charles, have you ever gone to an auction or have you ever worked in a store? There are some prices people are just absolutely not willing to pay, and then they'll put it on sale. But what has happened is we are going through a fundamental change, right? We are going through a fundamental change in these markets, right? And what I've been expecting is for us to stop and go sideways for a while and then have a liquidation, but we have not had that. Every time we go up, we go sideways for maybe a day or two and then straight back up. So, and this is being driven by, like, look at the Mag 7. Look at what Apple did yesterday. $300 a share, right? These companies are just jamming, and that's not even counting, the other stocks like AMD and Intel and things like that. With AI and all of this stuff, it's just out of control. I mean, if you look at two of the biggest leaders, Nvidia, right? Every dip is bid, right? So there's no economic benefit to shorting. Let's see. How can I put this that you guys will understand? When something goes on sale, that's when you short. If something is being marked up, that's not when you short. Does that make sense? Like, you only short when something's going on sale, when you see that sellers are stepping in. So what that means is you're not going to get the top, right? You're not going to short the top. You have to wait until the sellers step in and push price down. Let's go take a look. Now, our overnight inventory is long, so we are expecting a correction lower when London opens in a few minutes here, right? If we get any kind of movement down, right, we're going to take that overnight for the close and the overnight low. If we take out that overnight low, this 74.58, that's where the first obvious short position is. So when the market liquidates, where it finds buying is the not obvious short position. So we have a poor high, no poor low tonight. Okay? So where the market comes in and finds buyers, that's where the shorts are trapped. So right now it's here. You see? There's seller competition here. Okay? So had you shorted here and had you gone, you're like, okay, I'm going to short this, right? So I'm short here, I put my stop here, buy a little back here, and then I'm looking to close my position here. If I'm lucky, I might be able to close it here. But that's basically what's going on. And it's very, very frustrating. It's really, really frustrating for people because they never want to buy a market when it's going up because it's like it's going up, it's going to crash, I don't want to buy it. So I'll short it. Oh, crap, I shorted it and I got stopped out. So I'll short it again and I got stopped out. And I short it again and I got stopped out. Sometimes, friends, if you miss your trade, you're going to have to sit on your hands. There's nothing else to do. Now, look at this chart. Okay? We are in pure distribution above 74.85. We've got sellers at 74.89 and a quarter. There's no trade here, right? There is nothing for you to do here right now, right? Cash is a position, Raj, but unfortunately, when we say cash is a position, nobody knows what that means. When we say cash is a position, and I'm not arguing with you, I completely agree with you, but the person off the street has no clue what the hell that means because they don't know what a position is. Right? It's like one we have these trader terms that real people don't understand, right? So what I'm trying to do, I don't know whether I'm doing it successfully, is I'm trying to educate people on when to trade and when not to trade, right? And that's probably one of the I think this is the hardest thing I've ever done, right? You know, it's one of the hardest things I've ever done. It's not frustrating, it's just like, how do I get through to people, right? Yeah. Regular, normal people don't understand cash as a position. They're like, what are you talking about? What is a position? I'm not making any money. I've been sitting in front of this screen for 4 months and I haven't made a dime. All I've done is lose money, right? That's why trading is so hard, and that's why you should never quit your day job, right? Because there are going to be times like this, especially in these convoluted markets where there is no supply and all the companies are owned by these massive institutions, right? That are trillion-dollar institutions who lock up the float. Do you guys know what a locked float is? Anybody? A locked float is a float that is owned by large investors and it's paid for in cash. So they didn't borrow money to buy the stock, right? They bought the stock with cash and they're going to hold it. They're going to hold it for decades. So you can't get at it, right? They're not going to sell it. If they don't sell it, it's not going to depress the price, right? You need sellers for price to go down, right? So right now we've got sellers just at 89 and a quarter, but they stopped selling at 85, 86, right? This is an issue, right? And once again, we have another all-time high in the overnight. We are above yesterday's high. So because we're above yesterday's high, if the market opened here, if this was 9:30 in the morning, it would open on another gap. We have multiple gaps below us that have not filled. That is an indication of lack of supply. Okay? There is no supply in this market and it is impossible to short it long term. You know, hit and run shorts are okay, and that's why we teach you things like the look above and fail, right? But the look below and fail works much better in a trending up market, right? Every liquidation break is bought, right? We had one liquidation. We had one liquidation 2 days ago. Now look, we have shorts trapped here. We have shorts trapped here. We've got shorts trapped. Look at the size of this profile tells us that nobody wants to buy it. The only people who are buying it here are people who are forced or the people who are crazy, right? Very, very difficult business. And these Globex sessions, you know, at all-time highs, Globex sessions are so frustrating because people are all ready to trade. They want to go, and there's nothing to do except sit and wait, you know? So let's see what happens when London opens, right? I share your frustration too, right? You got it. I'm trading less. I'm trading smaller. Look, I don't even have my trading software open. Let me go open it, right? It's the last 6 weeks, right, have been brutal for retail traders, right? What I suggest you do during this time, right? Instead of forcing things and pushing things and losing money, take some time to learn. Do things like watch the offer. I mean, it is, spring, summer now. So, go enjoy the weather, right? Let's see if that 85 holds. So now London's going to open. London's going to try and get down to yesterday's high, which is at 83 and three quarters, right? There, we broke the 85s. Can we get some continuation? Finally, a little bit of liquidation, right? There we go. Boom. There's yesterday's high. Nice, nice. Now let's see what the follow through is. So it hit that J-low stop to the tick. See? And right back up. So basically a look below and fail of yesterday's high. There's probably going to be some selling when we get to 87. So now what did we just figure out? Anyone? You figured out where the shorts are trapped over the last couple of hours. They're trapped underneath 83. Why? Because that's where the London moved down to 83, saw those sellers, and as soon as they saw those buyers at 83, the sellers saw the buyers. As soon as they saw them, zip right back up, right? And the buyers chased them all the way up, back up to 85. Look. Do you guys understand that? So when a period opens, it's going to show you where the shorts are trapped because that's where the bid is. So now you found the bid. So if you went long 85, or 83, 84, right? Sell them on the way up because there's going to be sellers up here because it's choppy, right? There's just no reason to short this market, right? If you're quick, you can catch it. You can catch them here and there, but I'm telling you, whoof. It's like a meat grind. It's a meat grinder, and nobody saw it coming. Because the news, and this is why you should never, ever, ever trade news, right? Because everybody thought World War III was happening. And last I noticed, the war is still going on, but everything's at all-time highs. You watch the news, and it seems like the world's going to end. You look at the chart of Apple and Nvidia, and it looks like, we're going to Disneyland. So we got sellers just under 87 right now. They're selling the 86 quarters, right? Yeah, there's a wall at 86 and a quarter right now. Yeah, Google, I have to completely redraw those balance zones for Google. The other thing that's annoying is that the order flow at all-time highs is not predictable at all. It's very, very unpredictable. So you got to really, really, really manage your risk, right? I mean, look at this chop. I mean, the candles are what? A point? What, the range of each candle is 4 ticks. How are you going to trade that unless you're an algo, right? Very difficult, right? So what you do in times like this, because this is not the first time, like Roger's been with me since the beginning of the room, right? This is not your first barbecue. You've seen this exact scenario where the market hits all-time highs, right? It gets very, very difficult to trade because there's no follow through, right? But it will change. Right, Raj? You've been doing this with me for a while. Right? So it will change, and when it does change, you'll be prepared because you'll know what this market is like, and when it changes, you'll be, oh, okay, the change is coming. It's like, oh, it's been raining for 3 weeks. The sun's coming out, right? It'll be that obvious. But if you're not tuned in, you're not going to notice the change. And that frustration that you had now is just going to carry over, right? Now let's see if those 83 bids are still there. Right, and then we've got VWAP right underneath us here, right? So right now they're front running VWAP. When you see a level, and then as the space between the level and the bottom of the candles, you guys don't know this, but there are buy orders here. And that's why the market stops and tries to get those buyers to creep up. See? Just like that. Right, so the sellers have moved down just under 85, but there's still bids under 83. Let's see if we can come and fill those bids and take out that J low. If we take out this 80, 82 and 3/4 level, the people who've been using it as a stop will start tumbling out. And there is an hour and a half of people there. So that's why I use the half-hour stops to tell, because I know if a stop is held for like hours, when it breaks, there's a greater likelihood of more selling. You see? Now, had you been really quick, had you been Johnny on the spot, and you shorted the 86s, this is where you're going to be covering. This is where you can cover with some certainty, right? Well done, Moran. You're getting good at shorting, eh? That's good. Beautiful. Love to see it. See how they're slowly raising price? They found those buyers and they're trying to get them to pay 84. Will they pay 85, right? That's why they call this an auction, right? That's why they call this an auction. Ooh, there we go. Aggressive seller at 85. No. See, and that's exactly what we're looking for. We're looking for that aggressive seller if you're shorting. Nice. Nice. Good correction, Laura. Good, good, good. Now, staying under 82 will target the overnight point of control at 80. And that's where we should find some bids down here. Didn't quite tag VWAP. Ah. Finally, a little liquidation. It took a while, right? It took a whole 10 minutes for London to liquidate. Nice trade, Moran. Beautifully done. Beautifully done. Now let's see if we can, when we get back up to that previous day high, there should be a seller up there. Hmm. Okay. What's next? And if we break VWAP, of course, we're looking for the 79s, which is the top of that balance. Oof. Now we're creeping up to that previous day high. Now if you're a short seller and you haven't covered, say you were short 86, 80, 85, and you shorted against 87 as your stop, and you didn't cover the 83s, you didn't cover the 82s, your warning level now is yesterday's high. So if it takes back yesterday's high, then that is a signal to cover your short. If it can stay under yesterday's high, you can stay short. Make sense? Simple, right? Not at all complicated. Because that's where support was before. Support will turn into resistance when there's inventory trapped above it. Does that make sense? If you're going up and boom, 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 all the people who are along here, when you break that, that's when they start tumbling out. And that's when support turns into resistance. The opposite of when resistance turns into support is when the position is underneath, you break it and come back to the position, stop, and then bounce off of it. Right? People trade support and resistance, but they don't know how it's created. They don't know why it exists. So when you come into our room at the Trading Syndicate, we will teach you why something happens. There's nothing random about markets at all. Right? And all the math and all the quants in the world, right? You got to remember those people are trading with billions of dollars, not trading a $2,000 account. So when you're trading small accounts, when you're us, when you're retail, you got to use a little common sense, right? A little bit of common sense and a good business plan make a huge difference. Okay? That's all it is. A little common sense and a business plan. Yeah, when I talk about yesterday's high, David, I am talking about RTH always. Always, 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 always. See? Here it is. Right? Because they don't care what happened in the Globex session. Right? They don't care about Tuesday night's Globex. Right? Because Globex is just moving inventory. And that's what we call old business, which will be surpassed by new business the next day. See how there's a seller at the previous day high, David? See, there the seller is right there. Just showed you. Previous day high, seller. So you want, when you're using these levels, you want the level to be useful, right? You want to see that reaction. Otherwise, there's no use in it. Does that make sense? Everybody uses that previous day high from RTH. Now, if you were short, you should have covered. There's going to be a seller at the 85s. Make sure you take some off if you're long, right? Make sure you get paid, my friends. Make sure you get paid, right? No reason not to get paid. The overnight high and low of 2 days ago is irrelevant. The overnight high of today is relevant, and the overnight low of today is relevant. Of the previous Globex sessions, nobody cares. Right? Remember what I told you? There was going to be a seller at the previous day high. We cleaned that seller out, and if you were short if you were short 85, 86, and you didn't cover down here at 82, now you've just given up all your profits. Right? This is what I'm talking about. Right? And remember the bid was here, that's that blue line. Look how they're selling. Because the people who are buying this area are now selling because they're at break even. See? Now if we clear out that blue line, the next set of sellers are going to be up here at 86 and a half, 86 and a quarter. Does that make sense? Yeah, exactly, Moran. 81 to the tick. See how they're selling into the 85s? Right, so had you been long, say you bought 82, right? Say you went, okay, I'm going to buy it because it's holding VWAP. I buy 82, I put my stop under VWAP. You should be out at 84, 85 because they're selling 85. Take the 2 points. I mean, for now, right? 2 points is $100 on 3 contracts. That's $300. In and out, in and out, in and out. And that's why you're a trader. You're not an investor, right? You're not holding these positions. Given what we've just talked about for the entire last 45 minutes, why would you hold a trade for 30 points? It just doesn't make any business sense, right? Why would you have not covered your short at VWAP? Right? Just simple common sense when you apply it to the chart. The charts, that 1 minute chart is telling you everything you need to know. You don't need to look at the DOM. You don't need to have a footprint chart. You don't need to look at gamma levels and put walls and Velcro walls and all that shit. Just have a little frickin' common sense and pay attention to what this chart is telling you. Take all the noise that's banging around in your head and throw it out. Trust me, I've had the same noise. When I started retail trading, some people said, oh, you got to look at the NASDAQ to trade the ES, and then you got to look at the Russell and flip the chart upside down. Then you got to look at this, and you got to look at that. Then you got to look at the VIX, and you're looking at too many things. You're not concentrating on what is important, right? If you're not concentrating on what is important, you're in big trouble. You're never going to be profitable. The only thing is people don't tell you what's important, right? They talk in all this abstract language. Like, oh, it's not a science, it's an art. And oh, I can't tell you where to take the trade. That's all bullshit, right? So if you want to cut out the bullshit, come into our trading room and we'll teach you how to make money. End of story, right? Simple, common sense business. Good business habits, repetition. Repetition of knowing when to do business, when not to do business, right? And simplicity. The more complex, I see these people, when I started out, they're like, oh, you have to have a three-page trading plan for each day. How the hell are you going to remember 3 pages of information when you're getting hit in the face? It's impossible. It is the dumbest thing I've ever heard of. How are you gonna have a 3-page trading plan that's just full of information that's completely irrelevant to making money? I rail against this stuff because it just makes no sense. And I hate seeing people just lose money. Look, you can see the chart's telling you there's a seller at 85. Right? Now, if those sellers see buyers, they will raise their price to 86. But if they don't, they'll put it on sale and they'll start to compete back down to 83. That is a fact of life. Right? If you're selling something and somebody else is selling something and they undercut your price, are you just going to sit there like an idiot and not sell? Anyone? Right? If you're selling something at $5, right? If I'm selling at 5 and Dave and Moran come and offer it at $4.95, guys, are you awake still? Hello? Am I on mute? Are you going to sit there and not lower your price? Remember, you're selling the same contract, right? What I'm selling and what Dave and Moran are selling are the exact same thing. So there's nothing special about my ES contract. It is not a gold-plated ES contract. So why in the hell would you not offer it lower and go 494 or 490 or just hit the bid, right? Right? And you have to have, a sense of urgency, right? See, look, now they're putting it on sale and they're undercutting each other. And what did I sell you? 74.83 quarter, and there it is. Boom. There were sellers at 85. They lowered the price to 83 and a quarter. Does that bring in buyers? Does that little sale bring buyers in? or they're going to have to further discount the price, right? The chart is a sales chart, nothing more, and that's all it is, right? You have to have a sense of urgency to it. You just can't sit there and freeze. That's why we teach you what to do, so you're trained to do it when it happens instead of freezing, right? If you were long 82 and you didn't sell 85 or 84 and a half, you got rocks in your head, right? If you're like, oh, it'll go up, I'll just hang on to it. There's no sense of urgency, right? You have to have a sense of urgency when you're trading. That doesn't mean you have to be stressed out. The chart on the right, both charts tell you actual trades. Do you know what a chart is? A chart is a visual representation of transactions. Does that make sense to you? See, in the old days before charts, you would have this. You would have what you call the time and sales. And you know when you go to when you go to a store, they have a cash register with a tape. That's exactly what this is. So instead of looking at this, we look at this. So this shows you where the selling is, where they stop selling. Does that make sense? When you look at the depth of market or the order book, those are waiting orders. Those are not actual transactions. And that's a very good question for you, because people who are trying to trade off the order book never make money. Right? I've never met a single person who trades off of the DOM who makes money. And I've been doing this for 34 years. Unless you're manipulating the DOM, you're not making money trading it as a retail trader. Right? Hey, trade maker, how you doing? Right? You're welcome. Right? So all this is, in the old days, we would just trade off this and you just watch the ask. And if the ask starts moving up, oh, good. If the ask starts moving down, you know it's on sale. So simple. Here we have the red line is the ask, the green line is the bid. When the ask starts moving down, they're going to discount price. So remember how I said when we discounted price to 83 and a quarter? Does that bring in buyers? Look, it brought buyers in. Now where are they going to stop? They're going to kind of, when we get to that 85, it's going to stop. Let's see if that seller's still there. Look at that. Almost magic, right? There's that 85 seller. Sorry, I had to sneeze. Yeah, so there's that 85 seller. They're there again. No, can't get down to VWAP yet, Raj. Right? So choppy? Yes. Tough to trade? Yes. But can you learn? Man, there's so much you could have learned today if you had paid attention. You know, and a lot of people, like, people, I'll talk to people that'll be asking me questions later. And I'll go, did you watch the morning video? They're like, yeah. No, did you watch it or did you have it on in the background while you were peeling potatoes? You know, and I'm not saying folks on YouTube, the people in my trading classes and my mentoring, you should be going, you should be going and you should be rewinding and watching this stuff over and over and over again. When I was learning, I would watch, like, when I was learning, all they had was Dalton. And I would watch his stuff. I think I've watched every one of his videos at least 20 times. Still didn't help me make any money trading, but it helped me understand market profile, right? Now what we're doing is we're taking market profile, which is the chart on the right, and we're trying to make it practical. Like noticing where the previous day high from RTH is and looking to see where the buyers are if you come down to that 83 level, right? But you got to pay attention. When I first started retail trading, I would draw out the market profiles in my notebook every day after the close. I would rewind the charts. Now, you don't have to do this, right? It's not necessary. If you're doing this as kind of like a hobby, right? If you're doing if you're like a golfer on Saturdays, once a month kind of thing, right? And this week you're going to try trading and then you're going to put it away for a couple of months and then next week you're going to learn how to do macrame and the week after you're taking scuba diving lessons and the week after that you're taking a pottery class. Then you don't have to do what I'm telling you. But if you hope to make any money and you expect to make any money through any other means than just luck, right? And luck is not a business plan, right? If you hope to make money, if you want to do this, everybody's like, I want to quit my job and be a trader. Brother, you have a lot of work ahead of you. And you have to embrace that, right? And if you want to learn what information you have to look at versus what information is just useless crap, come to the trading syndicate. We've got a 3-day trail. It's only $19. And, you know, we'll teach you. Simple. And that's it for today, folks. Have a wonderful, wonderful trading day. Be safe out there. Don't let them suck you in with chop. Be smart. Don't be patient. Be smart. You'll become patient automatically if you're smart. Okay? Thanks, everyone. Have a wonderful morning. Appreciate you guys. Don't take candy from strange market makers. Have a great day. Bye for now.